morning, ladies and gentlemen, and welcome to the second edition of NCCPAP Now, a dialogue among NCCPAP members and their colleagues. I am Neil Fishman, chair of the PR committee and your host for today. So before we get started with today's program, we do have a little housekeeping that we do need to do. So as I said, this is our second in this series. If you have any questions regarding your CPE, you can contact Alexandra Visson-Dinero at the NCCPAP National Office. As you know, that because this is a webinar, there are polling questions. You must answer at least 3 of the 4 polling questions to get your CPE credit for today. We have 3 very good speakers. We are going to ask that if you have any questions, that you put them in the Q&A. If we do not get to your specific question today, it will be answered down the road. We do promise it will get answered. Slides, handouts are available now. You can go to the NCCPAP website. That's gonccpap.org/events/NCCPAP Now and get the slides there, or you can go log into the NCCPAP website, go to your community, and go to the library for this event. Without any further delay, our first speaker is Mark Stewart. For those who do not know, Mark Stewart is president of NCCPAP. So, Mark Stewart, if you will please take it away.
Thank you very much, Neil. Good morning, everybody, and thank you for being here today. I know it's a very difficult time of year for you guys to take times out of your schedule and join us. So we very much appreciate such a nice turnout today. It's always very good to see. I do, unfortunately, today have to start out on a very sad note. We lost over the weekend our friend and colleague, Don Ingram, who deserves a couple of minutes of our attention this morning. Don, beyond just being a friend to all of us, and he was just a dear friend to me over the years, always helped me out as a young practitioner anytime I needed something. Don was a lion for NCCPAP, not only on a New York State local level, but also on a national level. Has basically done everything in NCCPAP that you can do. NCCPAP, you will see this morning, sent out some information about arrangements for Don, but Don deserves mentioning this morning. I am truly saddened by this, as I know many of you are. But one thing, Don did love NCCPAP and would want us to continue to just move forward and plow forward and continue to push issues that affect practitioners. So Don, we love you, we'll miss you, and thank you for all you've done for us and for NCCPAP, my friend. With that said, I will move into the rest of our presentation for today. I wanted to discuss today really things more at a high level that NCCPAP is doing. My friends Steve and Mike will get into more nitty-gritty type stuff later today in our session here. I wanted to highlight something that's somewhat new that's known as the Practitioner Coalition. This has been a couple of years in the making of kind of back and forth work where several different accounting groups from across the country, NCCPAP included, realized that we had a lot of common goals that we were pushing. And we're all pushing it from our own ends and realized that if we had one consolidated voice on these issues that affect a wide swath of practitioners, that we'd have a greater voice, a more powerful voice than we could just have as individual organizations. So you see on the screen there, the various organizations that are currently participating, and this has kind of grown as time has moved along. Going back to December of 2020 was an initial letter that the coalition pushed forth. At the time, that was kind of, somewhat still in the height of the pandemic, where we're pushing to IRS and Treasury for targeted penalty relief. We've kind of been banging on that door for many, many, many months, and geez, it's been over a year now to try to get something moved along there. Recently, in the last couple of months, we kind of all came together as a group again and decided that we needed to put a more targeted letter forth with very specific recommendations that we really wanted IRS and Treasury to help out with. This coalition letter was sent in January. Coalition letter was sent to IRS Department of Treasury, as I mentioned. There were also copies sent to select members of the Senate Finance Committee and House Ways and Means Committee. In there were 4 or so targeted requests that we had, which I'll kind of highlight here. We asked for discontinuance of automated compliance actions until the IRS was prepared to devote necessary resources for resolutions of these matters. As we all know, guys, the IRS is way behind on correspondence and way behind on their phone system as far as answering calls. And we really want the IRS to just take a beat, a breath on certain things until they catch up on their enormous backlog that they have. Additional requests were to align requests for account holds with the time it takes for the IRS to process penalty abatement requests. Also, very importantly, a reasonable cause penalty waiver, similar to first-time penalty abatement waivers, but without affecting the taxpayer's eligibility for first-time abatement penalty waivers in future tax years. Finally, and almost really most importantly, provide taxpayers with targeted penalty relief from both the underestimated and estimated tax penalty and late payment penalty provisions for 2020 and 2021. So it's really a twofold ask here of the IRS without getting into the nitty-gritty. There is, yes, provide targeted relief in certain instances, but really more importantly, just asking the IRS and Treasury, just take a moment, a breath. We're not saying to never go after penalties and never go after folks for being late and that sort of thing. But until you catch up on your workload, just take a break. Because if you keep issuing notices like this, you're only going to increase the backlog. The backlog is not going to get any better. So, and we're not saying this was only the coalition's letter that pushed this forward. We're not taking credit for this just based on this letter, but it was one of many things pushed forward that eventually put enough pressure where the IRS did hear what we had to say and did listen to us. So this is somewhat of a win in terms of, was our coalition work successful? And is this something we should be seeking to work together on going forward with other accounting organizations? You see on the screen there, which I'm sure you've heard already, a series of notices for the IRS that were temporarily suspended. Just note that these notices, for the most part, were really related to unfiled tax returns and balance due notices. Really nothing else as of yet. It's not everything that we wanted, but it's some of what we wanted, which is at least a start. And hopefully, again, is evidence that these kind of joint initiatives we have with other accounting organizations do work. They do have a result. And although NCCPAP is a fantastic organization, and there's issues that we push forth on our own, and we'll continue to push forth on our own, I think it's important that we have common goals with other small accounting organizations out there and large accounting organizations as well. Going forward, I bring this forward to you as a group because I want you to bring issues to me, mention it to Alex at National as well, our admin, issues that you would like us to bring to the coalition going forward. Keep in mind when you bring issues especially when you're trying to get congressional pressure on things, they really have to be issues that affect a wide swath of taxpayers. Although it's important, the issues out there that affect just practitioners, they tend not to get as much traction as unless there's issues that affect a wide constituency. Those are just the brass tax facts of these things when you bring them forward. So think about those things. One of the things that I saw interestingly today, it was on the NCCPAP forum, and it's been brought forth to me many times, is what about delaying tax season? Do we need the date pushed forward? Push forward in terms of push back again this year. In talking with the coalition, which we have spoken to them in general about this, one consensus that we have as a group is, if there's going to be a pushback at tax season, it needs to be done early, and we're getting kind of late for it to be early at this point. And if for having consistency of dates pushback, one of the things they really hated last year was the tax deadline being pushed back, but not the estimated tax deadline pushed back. So I think if we're ever going to ask for something like this, it would have to be a kind of broad-ranging pushback that kept consistency of dates. I would say, folks, we do have some pessimism, okay, about the dates being pushed back, only because the last 2 years we had tangible evidence of the pandemic affecting taxpayers and practitioners. And there is almost, if anything, a little bit of a waning of the most recent variant of the coronavirus. So we're not sure pushing back the tax season deadline would get traction, but you never know. So let me know your thoughts. Other issues we're kind of batting around discussing, you see on screen there, as far as pain points, K2, K3 reporting, Form 7203 reporting. K2, K3 reporting is getting a lot of press, so I won't mention too much about that. 7203 reporting actually hasn't gotten much press at all. And that is actually required basis reporting for S corporation shareholders on their individual tax returns. That has very late release of guidance and forms on it. So we're hoping that there might be some traction in terms of forms not being ready on time for a pushback of tax season deadline. But I wouldn't hold your breath on that, guys. We can certainly still have talks about it, but I personally don't foresee it being, happening this particular tax season. Before I go today and turn it over to my friend Steve and to any questions that we have, I just wanted to discuss for a couple of minutes our plans for what would be our normal spring visit to DC. Actually got some new word this morning that the DC Capitol is now opening up a bit, believe it or not. It was closed for a long period of time. We're hoping that continues to be the case. If it does, we'll consider having a meeting in person in DC with legislators. If we can't have a meeting in person, we will certainly have some manner of virtual meeting with leaders on the Hill and hopefully leaders at the IRS as well. So as you run through tax season, even after tax season, any issue to your heart's content that you think is important, let us know. It could be a 1-second blurb, an email to me, an email to Alex. Let us know what issues are important to you so we can bring them to DC. No issue too big or too small. Just let us know, folks. We'll be happy to bring the issues forward. With that, my time is running short today, guys. Again, I love seeing everybody, and I will open the floor to questions.
Well, Mark, I don't know if this is good or bad, but we actually have no questions for you on your presentation.
Fantastic.
So now we will move on to our second speaker, Steve Mankowski, a former president of NCCPAP, is co-chair of our Tax Policy Committee, and is our primary liaison to the IRS in Washington. He is our representative at the monthly National Public Liaison meetings. So without any further delay, Steve Mankowski.
Good morning, Neil, and thank you very much, and thank you for all those taking time out of their busy schedules to attend this NCCPAP Now for this hour. I'm going to start off with something that I've spoken about a number of times, and this was one that came to my attention on Thursday afternoon in having a conversation with my stakeholder liaison. He had mentioned to me that as of the start of 2022, for the first 2 months, there have already been 59 data breaches of firms. And the scary part is 55 of them have occurred subsequent to January 24th, the opening of filing season. And it appears that the cyber crooks are now making a concerted effort at the mid-sized firms down to sole proprietors. It seems that a lot of times when this has come up, the common answer that I've gotten from a number of practitioners is, what do they care about me? I'm a small guy. In the whole scheme of things, you may be what's often referred to as the low-hanging fruit, and they can actually, if you don't have some deterrence in place, you're a lot easier to get than somebody who may have at least some minor roadblocks in place. So just some simple things to keep in mind. Please, please, please review your security. Check your passwords. Make sure you're not using any default passwords on any of your routers, including your home routers, as many people are still doing remote work, that's very key to make sure that you're doing everything you can to be a deterrent. If you haven't already done so, set up your software for multi-factor authentication. That's simply getting a text message when you log into the various software packages. The text message generally comes in within a matter of seconds after you hit your login button. You enter in generally a 6-digit code. And the key is that if somebody has hacked your system, you'll be getting the code, not them, and you'll know that there's an issue. And now's also a time to make sure that within your malpractice policy that you have some form of a cyber policy, just in case you do have an issue. It's one that can certainly be financially detrimental to any firm, and at least having a cyber policy in place gives you guidance as to what you need to do, and also can help with some of those certainly unwanted expenses during a very difficult time. It was ironic that this came up when it did, because a lot of the cyber threats has been talked about on the news lately with the happenings over with Russia and Ukraine, that may be a response back against some of the sanctions. I'm not saying that this is or isn't, especially since it started as of the beginning of the year and really went into high gear on the 24th, which was long before any of those actions. But it's certainly something that we need to keep in mind. You can easily check your IRS volume with both your PTIN and your EFIN on the same sites that you go into when you renew your PTINs. And the number's never going to be exact, and they really don't even give out how they come up with the numbers that are on there. But as long as they're reasonably close, you generally don't have a problem. If you know that you filed 100 returns and you see that you're at 300 this year, there's a chance you have a problem. If you do think you have a problem, what you need to do is contact your stakeholder liaison immediately, as well as your insurance carrier, the sooner rather than later, and they'll be able to guide you with the steps that you need to take in order to really batten down the hatches for your practice to prevent things from getting any worse, as well as what you may need to do to notify people. It's not a topic I like having to talk about, but it's certainly one with the breaches that have occurred this year is very topical, and one that we all need to ensure that we're protecting our client data. All right, as Mark had mentioned, we all know that there's been a major backlog within the IRS. They've stopped all the 500 series balance due notices in early February. And for those that have already been sent with intent to levy, taxpayers will have the ability to speak with IRS notices, or IRS employees rather. The CP90 notices for unpaid taxes, they've been paused. If someone is in an installment agreement, the CP 523 letters will continue. And that is key because they want to ensure that if someone is in default of their agreement, that they can get that reset, restructured, or whatever needs to do, because that is an ongoing issue. It's not something that's a new issue, and it's one that the sooner it gets corrected, the better off it'll be for the taxpayer to get that whole issue behind them. The IRS has been shifting the employees around to try to work on the backlog. Many of the employees that are being shifted are former collection employees. They obviously know the process, what they need to do, and it's certainly easier for them to flip in. It's key that the IRS is working on the issues, and I'd love to say that there's a set time frame, but at this point, they're just working through things. And the big issue the IRS continues to work on, is highlighted, is cases of non-filers for those with high income. And what the definition is of high income, don't really know. But certainly if you see that you have clients that have unfiled tax returns, or someone comes to you with back returns, it is important that you do get those returns filed. it's certainly easier to deal with a late filed return than trying to get the facsimile returns that the IRS will eventually prepare on behalf of the taxpayer and having to deal with those and getting those reversed. Refund offsets will continue as long as the liability has been assessed. If returns are sitting in this error resolution status, they're not subject to any type of offset. So at that point, those returns were not subject to having the refunds offset at this point. And one point of note is that with the stimulus money that was sent out, those were all set as not being subject to offset as long as they were deposited or sent out to the taxpayer, as well as with the advanced child tax credits. But if you recall from last year, and the same holds true for this year, if the taxpayer has any additional money that's due or additional stimulus money, those will be subject to offset. And as part of helping the IRS, they've been hiring upwards of 400 employees, specifically at this point down in the Puerto Rico region, primarily for the ACS areas, and to help with many of the Spanish-speaking population. Many of those that are being hired are bilingual. And now, Neil, polling question number 2. And while we're in polling question number 2, Neil, was there a question that came in?
Actually, there is. We have a question from somebody. Their question is, how do you contact your stakeholder liaison? Steve?
That's a very interesting question. That's one where, depending on what part of the country you're in, certainly if there's a NCCPAP chapter in that area, you should be able to reach out to your chapter, and they should be able to tell you pretty quickly how to reach out to your stakeholder liaison. I do believe that you can check that through the IRS website, although I'm not 100% certain that that is the case. Once I finish my presentation, I will check that out, and we'll be able to hopefully come back with an answer, or we'll make sure that that answer does get addressed. Okay, modernization of the EFTPS system. Part of what the IRS has with what used to be called the Taxpayer First Act Office, which is now IRS Now, some of what they're looking to do with their modernization is they're working in transforming what they're calling the Transforming Tax Collection. They love their acronyms, so T2C, and they're just really trying to improve and enhance the taxpayer experience. Seems to be a buzzword that some consultant must have told the IRS at some point, because everything that seems to come out related to anything now and improving all seems to be talking about enhancing the taxpayer experience. First revisions could be as early as 2023, and they are open for comments. If you do have comments of things you'd like to see in these revisions, as Neil had mentioned, please forward them through our office, and I can make sure that they get submitted into the people that are working on these revisions. One thing that we should all be happy to know is that they are revisiting the usage of PINs and the fact of having to mail them to taxpayers in order for them to use the EFTPS system. Many of the other functions within the IRS where you do have to get passwords or PINs have been automated, where they're able to send out something through an email that's already on file. They are working at having that as part of the revamping of EFTPS. How it's going to end up working, I'm not 100% certain, as it's still in development. But we can rest assured that they are looking at improving a system that has worked in the past. Whether that can be used for other tax liabilities is still open for debate. And this was a comment, I believe, that in the chat, Michael Rubenstein had mentioned about failure to file notices. This is an issue that I as well was dealing with last week with a client. It's otherwise known as CP 162A. This is not one of the letters that was suspended by the IRS in early February. At least with the notice that I received that was mailed out on Valentine's Day, very fitting to come from the IRS on Valentine's Day. And they were assessing penalty for non-filed returns. Of course, the return had been filed timely the month before. When I called the IRS to discuss, the rep that I was dealing with wasn't aware that, in my case, Pennsylvania, some of the mid-Atlantic areas of Pennsylvania were subject to IDA. And further, she wasn't aware that the deadline got extended to February 15th. So when she went through, did some research, she saw that that in fact was the case. But of course, her system wasn't allowing her to remove the penalties, so she had to forward that through to a manager. If anyone gets any of these letters, you do need to reach out. They will be able to remove those penalties as long as you truly were in an area that was designated as a disaster by the government related to Hurricane Ida. In my case, what should have been a 10 or 15-minute phone call turned into well in excess of an hour, along with a whole lot of frustration. But I'll know for sure in 2 or 3 weeks when I get the follow-up letter telling me that the penalty's been removed and didn't need to use any first-time abatement or reasonable cause abatements. It was simply that they were in a disaster area. So I would recommend that if someone does need to call in for that they do have their data handy, as far as that the fact that they are in that area, or you as the preparer are in a disaster area, and have that ready so that if the question arises, that you'll have all of that readily available. And with that, Neil, I'm going to turn it back over to you for a little Q&A.
And we do have a question again. To your knowledge, do insurance policies typically include cyber or not? Well, I can answer that first, and I'll open this to the others, but I know that for myself, I do have a separate cyber policy in my office.
And on my end, I will say that the policy that I have, I did go through. My agent is up in the Long Island area, and it is one of the AICPA policies that I do have. And the cyber policy is a rider on my current policy. And there's really, and there's some differences between them. I'm not gonna get into what the specifics are, but if you haven't specifically talked to your insurance agent about a cyber policy, there's really a good chance that you do not have a cyber policy. It should be something that can easily be added on to your existing policy. And it's one where my recommendation is call your insurance carrier. One, they should be able to tell you pretty quickly if you have whether it's a rider or a separate policy. And if you don't have one, they can certainly recommend which avenue you do want to go and what the differences are between them. And that's something that, yes, we're in filing season, but I would suggest that you drop a line to your carrier sooner rather than later, because you certainly don't want to be on the downside of a potential data breach and not have coverage in effect. One of the old adages is that, similar to people with motorcycles, there's two types of riders, those who have fallen and those who have yet to fall. Within the cyber world, the scary part is many of us may have a breach and not even be aware of it, because it may just be a piece of malware on your system that may not have even been acted upon. But it's certainly worth keeping things at hand and checking and keeping your malware up to date, all your system updates, keep them up to date, and again, don't use default passwords.
Steve, we have one more question for you. Is that even with the IDA extension, didn't you have to file a timely extension at May 15th?
You would have needed to have filed an extension of time to go from May 15th through the September or October filing times. So So if you did not put through a valid extension, there is no extension for IDA because you were not properly extended to begin with. So at that point, you would have a late filing that would date back to May timeframe, or in the case of business returns, back to March. So that's something you certainly want to check in that realm as well. That just gave an extension from the September 15th or October 15th deadlines through to February 15th.
Thank you very much, Steve. Moving on to our final presenter, Mike Seidenberg is the new president of the Westchester Rockland Chapter in New York. There's something very interesting going on, not just in New York, but in a multitude of states throughout the country. So I'm going to turn this over now to Mike Seidenberg. Michael?
Okay, good morning. Welcome. This is Michael Seidenberg of the Westchester Rockland Chapter. Today's topic is going to be the pass-through entity tax. I want to welcome, we have a great turnout today from Nassau, Suffolk, Westchester, Texas, New Jersey, New England, Delaware Valley, Florida, and some other. And I'm very happy that we're having this big turnout. So let's go on. Pass-through entity tax affects 22 states right now, but more states could be passing the law. So let's just talk a little bit about what the pass-through entity tax is. A lot of you probably have taken some courses beforehand, so you're pretty familiar with what it is. It's a workaround because of the 10K SALT tax, not the limitation on Schedule A for state and real estate taxes. So what a lot of states did, they did a workaround. They either decoupled or they were very creative. I think Connecticut was the first state to do it. And once they beat all the challenges, especially from the Internal Revenue Service, then more states came along, New Jersey, Pennsylvania, Massachusetts. New York was one of the late ones that came through with the pass-through entity tax. So you know that most of your S corporations and partnerships will be able to take advantage of this, and their members, the individuals, will save money on the federal tax because they'll get a deduction for the pass-through entity tax, and the tax that they pay is going to just be allocated toward the income tax on the pass-through income. Now you see partners, members, or shareholders that have paid the pass-through entity tax can either receive a credit on their return, or they could also deduct the distributive share of the income to determine their state income tax liability. So what's that saying to us is that there is a separate calculation of the pass-through entity tax. And New York State, if you're living in New York State, you have to use the New York State site, which is very annoying. Other states have it integrated in the software. Your software package will do it. I know New Jersey, you can do it through your software. You can do Connecticut's pass-through entity tax through your software, but New York, they're not kind to us. We have to use their site. You have to create a login. Your client has to do the login, is what they say. They say the accountant can't do it, but an authorized person. So they're really talking about the owner of the entity that has to create the login and make the election for the pass-through entity tax. Now that's just in New York. Very tough in New York. Coming up March 15th, you're going to have to make that election. You don't have much time to do it. You're going to have to make the election. You're going to have to figure out what your estimated taxes on that election is going to be, and you're going to have to start making on March 15th. Doesn't give us a lot of time to figure it out when our entities, our tax returns are due March 15th. And New York was very late to get their site up so we could do this. Now, if you notice, it's the last slide, but we'll have a virtual map. And the rules by state are different. So if you're going to ask me what the rules are in California or Massachusetts or Texas, which doesn't, I believe, have a pass-through entity tax, I can't answer that. I could direct you where to go to find your answer. And that's really what the gist of this seminar is being aware that there is a pass-through entity tax, maybe one in your state. You may have missed it already, the opportunity to take advantage of it, but at least you'll know for 2022 it exists. I have to do a little research, and to be a good accountant for my client, I'm going to learn about it. Now, some states allow residents a credit for the entity tax paid to the other state. Oh, that's great. Do I know the rules right now? No. What will I know? By the end of tax season, I'll probably know more about New York's. But other states, I'm going to have to look that up. I'm not going to know that, but at least I know where to go. And let's go on. Okay, I talked about how in New York State, you have to make an annual election. But that's only New York State. New Jersey, you don't have to do that. I believe you don't have to do it in Connecticut. But correct me if I'm wrong, because I can't remember every state. There's over 22 that have a pass-through entity tax. How can we, as practitioners, be aware of what's going on? All right, so here, which I said I didn't know about Connecticut, they're currently the only state that has pass-through entity tax that's mandatory. I'm glad I know that. So now you have to be aware that if you have a pass-through entity, an S Corp partnership operating in another state, that there may be a pass-through entity tax that you have to make an election to get a benefit for your non-resident shareholders. Certainly, it is not simple. What is simple? If you're a one-partner S Corp or you're a two-partner partnership, and they all live in the state. Once they live outside of the state, now it's getting complicated. Now, what happens if you have pass-through entities? With partners that are outside the state? Gets even more complicated. Do I know how to make the calculation? No. I'm going to have to go to workshops, and one that's coming up, which is March 4th with Neil Katz. That's when you're going to want to go to, that NCCPAP's offering. An hour and a half, you'll learn the nuts and bolts of the pass-through entity tax in New York State. And that will be important because, as I said, if it's only a one-partner, a two-partner partnership, and a one-partner S Corp, that will be easy. Anything different, you have pass-through entities, you have trust, K1s, non-resident shareholders, it's a nightmare. You have C corporations that are partners in an S Corp. New York doesn't allow them to get a pass-through entity tax credit. You're going to have to do a complicated calculation. So as I said, be aware that your state may have a pass-through entity tax, or a client in another state might have one, and you're going to have to become more knowledgeable in other states, only to be fair to your client to give him the most deductions that is available to him. Let's go on to the next slide. Tells you in general about some states may provide a deduction, exclusion, credit. Again, do I know from state to state? I know a little bit more about New York, Connecticut, New Jersey, Massachusetts, California. I don't know. I just know they do have a pass-through entity tax. We have this map, and it's interactive on the site, the NCCPAP library. So you can see a lot of states, as I said before, Texas, there, Oklahoma, Arizona, Louisiana. I'm sure Frank has clients in one of those states. And here you have Florida. You're surrounded by states that have the pass-through entity tax. All right. So Florida residents don't have to worry, but if you have a partnership and you have residents in Georgia or Alabama, oh, you have to learn about the pass-through entity tax. So you'll see on the map in blue, these are all the states currently as of January 19th have pass-through entity tax. In white, right now, they don't have anything. States that are yellow have bills with their legislative houses. It's proposed. As of now, things could have changed. If anyone knows, this is the 19th. This is how many states. I'm sure it's now it's March. Some other states might have come along with the pass-through entity tax. There is also a schedule, a 4th-page schedule that will give out more information on every state and what their position is right now, January, of the pass-through entity tax. Now, this is an AICPA map, so I want to give credit to them. And the other information that I have, and that's presented in this seminar, is has been taken from the Tax Foundation and BKD CPA advisors. I always like to give credit when I use other accounting firms' information or other groups. So I just want to say again that March 4th is a very good seminar, the nuts and bolts of doing the pass-through entity tax. That's what you're going to want to see. You'll be able to get a lot of questions answered through Neil Katz. So let's go on if there's any questions.
We do have a question, Mike.
Okay.
And the question is, PTET is great or not so great for business owners. What about the majority of other taxpayers who are not business owners? Any relief talked about for them?
As far as I know, that's as of today, there is nothing else in the works that I am aware about. Steve Mankowski might know something else that's going on there. But as far as I know, the only benefit is to partnerships and S corporations. I don't know if there's any discussion on making it available to people who are self-employed. If anyone else has an opinion or knows of anything.
Well, if I may add to that, Michael, as we all know, and as you said at the beginning of your presentation, when they passed the Tax Cuts and Jobs Act, a number of states severed with the federal government with regard to taxation. And while the federal government put certain limitations on SALT, the various states said, no, you can take the full deduction on your state income tax return on your personal return. Remember, the pass-through entity tax, as you said, is for entities, S corps, and partnerships. I think I can speak for Steve when we say we haven't heard anything yet coming down the pipeline on the federal level. We haven't heard anything on any of the state levels.
Well, and remember, everyone, this is an excellent planning time for your clients as you sit down with them. I know there's certain clients out there that for whatever reason like to be just regular old Schedule Cs. Maybe it's time to have a discussion with them. Look, with the stroke of a pen, just by incorporating and electing S status, for example, depending on the state that you're in, you can avail yourself of the pass-through entity tax. And these are really where we can provide value adds to our clients. Behind, us just doing the mechanical calculation of this stuff doesn't provide value to clients. But us being able to plan the client, to have that large Schedule C client that comes in and says, look, here's what's going on. I've heard about this pass-through entity tax. Walk them through. It's not the biggest thing in the world to incorporate and elect S status. Consider doing that and avail yourself of the PET tax. So there's a myriad of planning opportunities around this where you really provide a value add to your clients.
And we do have one other question. The question is there a consensus as to the handling of the PTET for the New York City UBT tax? Is it an add back or not?
That's a good question. that I don't know the answer to, but I will pose that or find out from Neil Katz, who's doing his workshop, and he may have further information. Also, we had a seminar that was given by Mark Klein. I don't know if he had answered that, but I'm sure that was a question. And that is an outstanding question that we've been seeing. But there is no, I don't have an answer to that. I don't know if anyone else has had that question posed to them.
Unfortunately, when it's come to both New York State and New York City in trying to get clarity on any of these issues, they've been deafeningly silent. Unfortunately.
So it's similar to it's similar to when we asked about the S corporation owners getting the credit, retention, or the employee credit. We're not going to get an answer probably this season, maybe next season.
And that unfortunately has happened a lot, where often we get the answer after tax season is over. And it's why, unfortunately, if you have these issues and you guys are not going to like this answer, if you're unsure, it has to go on extension. And I personally hate extensions. I don't like doing them, but a lot of times you're going to have no choice until you get clarity on some of these matters this year, folks.
And as we bring this program to an end, first, I want to give our thanks to Mark, Steve, and Mike for their presentations. I also want to give our thanks to our people, our friends at Marketex, who help put this together for us so that we can get this information out to you, our members, and even to those of you, because I see that we do have a few people who are not members. For those of you who are not, please check out the website, check out our organization, consider becoming a member. To repeat what Mark and Steve have said, if you have an issue that you think needs to be addressed to the IRS, to Congress, please pass it on to the national office, to the tax committee. It will be considered, and we will see what we can do with it. Our next, now, since it is tomorrow is March 1st, and we go really into the nuts and bolts of coming up on April 15th, which is now just a mere 6 weeks away, we want to thank everybody for taking the time to attend this program. As you can see, our next program will be on May 2nd, so this way everybody doesn't have to worry, but be assured that if something comes up that we feel needs to be made available or made aware, that you need to be made aware of, NCCPAP will make sure that you are aware of it. Lastly, again, we want to express our condolences to the Ingram family. I know that an email has gone out with information regarding Mr. Ingram and his the services and afterwards. So please check your email for that. And again, on behalf of Mark, Mike, and Steve, thank you all for attending. As soon as this ends, you will be directed to a survey and to give comments. The slides are available on the NCCPAP website. This presentation will also be sent out to everybody who attended. Thank you all for attending. Have a good day.